This is Business Report Nigeria, brought to you by your digital First Pan-African News Network, TOS Television. I am Ruwa Penawo. There are indications that some deposit money banks, DMBs, are still waiting for clarity on implementation of the 6.98 kobo per transaction rate brokered by the Central Bank of Nigeria between telecommunications companies and banks. Recall that the Central Bank of Nigeria, in a circular release, gave details of the resolution of a meeting between CBN, mobile network operators MNOs, the Nigerian Communications Commission NCC, and deposit money banks in response to threats issued by the mobile network operators to withdraw the unstructured supplementary service data USSD services nationwide. Apparently, this was caused by the accumulation of outstanding fees for USSD services rendered by the MNOs. At the close of the meeting, it was decided that a flat rate per transaction of 6.98 kobo will be charged for USSD to replace the current per session billing. Now, while analysts have said that the new structure is actually more transparent, many banks are still waiting for clarity regarding how the charges will be implemented. Questions such as, will payment be on only revenue-generating transactions, or will the banks have to pay for failed transactions, are waiting to be answered. At the 30th Seminar for Finance Correspondents and Business Editors held on March 20th, 2021, Godwin Emefiele, Governor of the Central Bank of Nigeria, said to further drive growth, Nigeria needs to build, a solid digital economy, and this can be achieved when we concentrate on digital infrastructure. He stated further that the digital economy will be a key factor in the efforts made by the bank to drive growth. In his words, the digital economy is made up of various components, including data analytics, robotics, artificial intelligence, machine learning, e-commerce, e-business, e-infrastructure, and CBN is focused on stimulating economic growth. He placed emphasis on the fact that currently the volatile effects of the COVID-19 pandemic has kept Nigerians in an era of unprecedented change, and the existence of these digital channels along with various mobile and web-based channels was what helped support households and business continuity. To help with the effects of the COVID-19 pandemic, the Central Bank of Nigeria has disbursed 149.21 billion naira to 316,869 households. The funds were given out in the first phase of the 150 billion naira Targeted Credit Facility (TCF) and disbursed through the NIRSAL Microfinance Bank. Now, according to the CBN Governor, Godwin Emefiele, the success of the scheme has propelled the bank to double the fund to 300 billion naira, with the second phase of 150 billion naira set to kick off at a date that is yet to be announced. Each qualified household is expected to access a maximum of 3 million naira at 5 to 9% interest rate, depending on the loan purpose. The governor is positive that this move will stimulate the economy. To restate its commitment to environmental sustainability, Keystone Bank Limited partnered with the Nigerian Conservation Foundation (NCF) to plant 100 fruit trees. The bank made it clear that the exercise was in alignment with the goals of preservation and restoration of the environment for the benefit of the people, as it equally supports NCF's Green Recovery Initiative, which is aimed at increasing Nigeria's forest cover to at least 25% over the next 30 years. This initiative is coming at a time when Nigeria is recording one of the highest rates of forest loss globally. Mr. Olaniran Olayinka, Managing Director, CEO of Keystone Bank, called on individuals, civil society actors, and corporate organizations to think deeply on the implication of losing such valuable heritage. Practically, it would affect every area of life, including the economy, in the long run. There's more coming up on Business Report Nigeria. I will be back after this short break. The Chief Executive Officer of Arik Air, Captain Roy Ilegbodu, has said the effects of the COVID-19 pandemic on the air transport industry are not dwindling. This is making it hard for airlines to stay afloat. Now, even though the federal government released a 5 billion naira stimulus package for the domestic carriers, The amount is not quite enough to get airlines out of the difficulty they are facing. The depreciating naira against other currencies also had a terrible effect on airline operations, even as they have to try to remain stable despite the deplorable state of airport and air navigation facilities. He said, and I quote, "I think the entire industry is in a situation where significant sums of money need to be injected into the system to assist, to make government aware that an airline itself to a nation is not necessarily about an airline. Most airlines will not be profitable apart from the so-called low-cost carriers. But when you take the entire network of services they provide as a portfolio, hotel chains, other support services on ground hailing, and all that are profitable because the airline exists, that overall contribution to the GDP of any country is very critical." Basically, the government needs to become aware, of how much airlines contribute to the economy so that they can see reasons to keep airlines alive. The federal government has said Nigeria's livestock sector has the potential to add 33 trillion naira worth of investments to the country's economy. Sabo Nanono, Minister of Agriculture and Rural Development, said that the federal government was working hard to ensure the release of this huge investment into the economy. Now, according to him, the goal of the Federal Ministry of Agriculture and Rural Development is to kickstart economic diversification from an oil-based economy to an agro-based economy. And to achieve this, the implementation of agricultural mechanization has commenced. This will ensure that food scarcity becomes a thing of the past, and there would be more than enough to export as well to neighboring countries. The terrible power situation has continued to trigger the contraction or total closure of many businesses, even as rising inflation and high exchange rates increases the prices of raw materials and other production inputs. Now, according to labor statistics report released by the National Bureau of Statistics, NBS, today, March 22nd, 2021, Nigeria's unemployment rate increased from 27.1% to 33.3% in the fourth quarter of 2020, a figure which is 6.2% higher when compared to the 27.1% recorded in the second quarter of last year. In its bi-yearly review of the economy report, the Manufacturers Association of Nigeria disclosed that in the last 2 years, 2019 to 2020, manufacturers in Nigeria spent about 149.29 billion naira on alternative power supply. And in 2020, its members spent 81.91 billion naira on alternative power supply. They have called on the government to make important and necessary reviews. The president, Dangote Group, Aliko Dangote, had revealed that the granulated urea fertilizer plant worth 2 billion naira, located at Ibeju, Lekki, Lagos, will begin operations next week. He made the announcement during the tour of facilities by the governor of Lagos State, Mr. Babajide Sanwo-Olu, at the Lekki Free Trade Zone and Dangote Petrochemicals and Refinery Complex. The fertilizer plant, which has a nameplate annual capacity of 3 million tons of urea and ammonia, would be completed later this year, and production would commence in the first quarter of 2022. The company is building a refinery with a capacity to refine 650,000 barrels per day of crude oil. There's still more coming up on Business Report Nigeria. I will be back immediately after the short break. The Lagos Free Zone, which already has a committed investment of $2 billion, is on track to attract an additional $5 billion over the next 4 years. The Chief Executive Officer, Dinesh Rathi, stated that the zone was simplifying the entry and operations for foreign investors, and this would, by extension, improve the ease of doing business situation. Now, speaking during the visit, Governor Sanwo-Olu lauded the management of the LFZ and its promoter, Tolaram Group, for their commitment and investment in the zone, which he said would boost the economy of the state and the nation generally. Chinju Udora Management, Business Development and Marketing said the zone, which was integrated with the Lekki Deep Seaport, had already generated more than 10,000 direct and indirect jobs. The federal government has given details on how it hopes to raise the $1.5 billion for the rehabilitation of the PORT-HARCOURT refinery in Rivers State. This is to assure the public that the rehabilitation will not add to the country's debt burden. The Minister of State for Petroleum Resources, Timothy Silva, said about $800 million of the funds will be coming from appropriation, so $100 million from the internal operations of NNPC, and the rest from the African Export-Import Bank, Bank. The government therefore has no intention of borrowing all the funds needed for the rehabilitation of the refinery, which according to him will be functional in 18 months. Silva revealed that the federal appropriation would contribute $800 million to the project, and a commercial discussion is ongoing between the NNPC and Bank on how the money would be paid from the operations of the refinery. Timothy Silva has asked Nigerians to hold him responsible for every dollar spent on the renovation of the PORT-HARCOURT refinery. Financial expert and managing director of Sigma Pensions Limited, Dave Oduanu, stated that savings and pension funds are critical to development. He urged the government to introduce right incentives that will promote a savings culture. He noted that short and long-term savings has triggered development in many countries around the world, and the level of savings in an economy has a multiplier effect on its investment, as long-term savings will push activities in every sector of the economy and accelerate growth. Now, according to him, savings and pensions are critical to national development. And on a final note, at the close of trading activities for the third week in the month of March, the Nigerian Stock Exchange Industrial Index closed on a bearish note as the top loser for the week ahead of other sectors. In comparison to the overall performance of the market, the NSE Industrial Index underperformed by declining by 2.62%, while the NSE All-Share Index and the market capitalization depreciated by minus 0.69%. So what is important is the NSE Industrial Index was designed to provide an investable benchmark to capture the performance of the industrial sector. The overall performance of the companies it monitors was relatively bearish, for the week closing on a negative note driven by a huge loss from BUA Cement shares. BUA Cement was down by minus 6.40% to close at 69.95 kobo. And on that note, we end Business Report Nigeria. Thank you for watching. Do follow us on social media at TOSTV Network on Facebook, Instagram, and Twitter. Like and subscribe to our YouTube channel at TOSTV Network. I am Ruel Panao. Good day.